Hello, I'm Peter Bradley. Welcome to the latest edition of Supply Chain Spotlight. With me today is Cayce Roy, Executive Vice President for Retail Supply Chain Group for Liquidity Services. Thanks for joining us, Cayce. And let's start by telling us a little bit about Liquidity Services, who you are and what you do.
Great, yeah. Thanks first off for having me. Liquidity Services has been a company since 1999, so around for about 13 years. Our organization focuses on the reverse supply chain and creating online marketplaces to move surplus assets. We have, 2.2 million business buyers as well as consumer marketplaces to move assets, surplus assets for the largest Fortune 1000 companies, as well as the public sector. And the goods will range from capital assets to iPods to what we do for the Department of Defense with the non-military goods. So we recently helped the Navy decommission a destroyer and move that for scrap. So a broad range of client base, great range of buyers, and we're about creating new innovative marketplaces, transparent, so that our buyers can become can find the goods they're looking for and depend on the services we provide, and our clients are successful as we've created those marketplaces for their goods, and it's a virtuous cycle as a result.
Good, good. Now we're hearing more and more about, reverse logistics has been around for a long time, but it seems to be getting an increasing focus. Why is that? What's going on in the reverse logistics world?
Yeah, I think a few factors. One, the traditional supply chain, forward supply chain, people have been working on that for decades now, right? And the reverse supply chain has been probably an area that's been less focused on. I think that's one factor. The other factor is that, online growth. So we've created online marketplaces that really create global capabilities to move products and assets that otherwise might not have had as much potential to get value. So I think the growth of online is also very strong. Consumers are become more frugal. So the low growth economy, consumers are far more open to looking for products that are a deal. If you look at the commercials, people are appealing more to the deal they found than the prestige they get from an item. So that idea of consumer frugality makes consumers more open to secondary markets in the secondary marketplace, which means businesses can have more success, which creates a growth industry, and I think that's one reason as well. And I think the other area is that companies, as more and more consumers' first taste of their products are coming through secondary markets, they're understanding that the perception of their service, the perception of the price, the perception of their brand is being impacted by the secondary markets. And so, that's making companies more aware of reverse supply chain and secondary markets to their own brand and the quality of the brand and their ability to continue to grow their business. And then finally, green, right? Green solutions, both companies looking to go green, looking for cost-effective methods to reduce the costs of transportation, greenhouse gas, but also just to find economies of scale, and I think that's also pushing. And so those are some of the key factors that really have shed a light on this area now.
Now, there's a lot more complexity than people realize to it, and people have to look at it at the complexity. Address, if you will, some of the complexity and specifically brand protection.
Yeah. It is far more complex than people have looked at it in the past, and as organizations continue to look for ways to improve their overall profits and their overall impact to their customers and their customer service, they're appreciating that the reverse supply chain, the secondary markets really do impact their abilities to be successful. So I think it's important for companies to look at not only costs or recovery, but look across their entire reverse supply chain like they've done in the traditional supply chain, forward supply chain, and really look to optimize across all of it and to really focus on net recovery. And as they're doing that, also appreciate that more and more customers are going to be getting their first experiences or an experience of their brand in the secondary market. So they're going to buy a refurbished item, or they're going to find an item that's like new. And companies are really becoming to appreciate the need for them to be able to proactively manage that aspect and not leave that up to somebody else, but to take a more active role in managing the brand and the service in the secondary markets. And that's where we think Liquidity Service really helps them add value and really finds gets the right product to the right customers at the right price, at the right time. So that really creates the net value that we create.
Right. And we can understand the physical piece of that. How about the technology side, though, in terms of enabling a very cost-effective reverse supply chain?
Yeah, it really happens with technology. So first off, you have global online marketplaces. That's all powered by technology. The experience to actually create a truly successful global marketplace takes great technology, great execution from an operations, great customer service, but it does start with technology, right? The ability to figure out where the product is going to get the greatest value is all about real-time market data, and your ability to really utilize that, access that and utilize that to really make those optimal decisions. And then the efficiencies of re-engineering the supply chain, using that data, using those marketplaces to really create the most cost-effective structures, that sort of becomes the output of that as well.
Good. And you mentioned a moment ago sustainability and fitting into this. Connect the dots, if you will, between reverse logistics and sustainability.
Yeah, sure. If you think of reverse logistics, it's all of the assets that are falling out of the forward supply chain. So whether that's a forklift moving the goods in a warehouse from point A to point B, it's the physical items in the store, or the equipment to get it from point A to point B. All of that we see as byproducts of the supply chain and part of the reverse supply chain. And so if you can create global online marketplaces for those goods, those items intrinsically have more value than if they're being, in some ways, going to landfill. So intrinsically, by creating more value, you're really helping sustain the value of those goods over a longer period of time, and in some cases, just creating value for those goods that previously didn't exist. So that in itself is sustainable. So we're a firm believer as we're successful and we're helping companies be successful, we're actually doing good as a byproduct of that, because we're adding value to goods that otherwise would either be end of life, or we're sustaining that life for longer than they otherwise would be.
Good. And finally, we've been in a fairly slow growth economy in the last few years. How has that affected your strategy?
Yeah, it's helpful from both. Businesses are more open to looking at this area, right? If you're slow growth, it's not about, okay, how many more stores am I going to open, or how many new products I'm going to create. You look for more opportunities to sort of find inefficiencies or areas that could be made more efficient. And so I think the reverse supply chain is getting more focus as a result of that. And then you've got the other factor with consumer frugality, consumers wanting to look for deals. That makes it actually more of an opportunity because there's more of a market for those goods and there's more value for those goods intrinsically going forward. So that's sort of creating sort of a 1 + 1 effect, equaling 3, I think.
Well, good. It'll be interesting to follow you in the days to come. Thanks very much for being with us today. I appreciate it.
Thank you. Thank you for the time.
Thanks. Good.
Bye.